Hey everyone, welcome to today's show on Wealth Strategy Secrets. Today we're joined by Dave Seymour, nationally recognized real estate expert and star of A&E's Flipping Boston. As both a residential and commercial real estate investor, Dave has become one of the most recognizable experts in his field. His unabridged passion for business and real estate put him on the radar of A&E Television Network, as well as multiple news organizations, including CBS, ABC, CNBC, Fox, and CNN. New York Times reported that Dave Seymour's series Flipping Boston posted the highest ratings ever for the A&E network at the time of airing. Dave has been sought after as a tell-it-like-it-is mentor and motivator in the real estate world, with a track record of unmatched success everywhere he reaches. Dave, my friend, welcome to the show.
Hey, Dave Walcott. Thanks for having me, brother. How are you?
You bet. No, it's so good to connect, Dave. I know it's definitely been a while, so really
Sure.
looking forward to this interview. And I know for a lot of folks out there who aren't really familiar, with your background or what,
Mhm.
you guys are doing, maybe you can kind of kick us off with, your story and how you got
Yeah.
into real estate and investing in
Yeah.
tangible assets.
Yeah, sure, man. It's been an interesting journey for sure. It's like it goes through various phases, from broke as a joke to figuring something out to implementing what I figured out, and
Yeah.
then turning my personal finances around. But look, I'll keep it kind of succinct. There's a disconnect, I think, between a lot of the information that's out there when it comes to capital and wealth and security and all of the things that we kind of take for granted, I think, as Americans. I'm a immigrant to the States. I came from England back in 1986, and I came from a very blue collar background. We didn't have any money. I was broke, but I didn't know it. All I needed was a soccer ball and a patch of green grass, and it was on like Donkey Kong. We went out when the sun came up, and we came home when the sun went down, and we just lived our childhoods as kids. But it never involved anything around financial education or capital movement or understanding anything from a standpoint or a position of wealth. And for me, I paid a pretty heavy price for that because all I knew how to do was trade time for money, right? Not right. Please understand this, Dave, and anybody who listens to us. None of my thesis or philosophies are born in morality. Okay, they're not right or wrong, good or bad, up or down. I think as human beings, we get to a point of either being sick and tired of being sick and tired, and then we change. We're forced into change, or we accept failure and mediocrity and just live a life. And again, not based in morality. But look, I always it's I get asked this question so many times, and I try and be succinct with it, but it's got so many rabbit holes that I could go down. Basically, I was always edgy, man. I was discontented. Like I knew, like I wasn't a good
Yeah.
employee, Dave.
Yeah.
I
Yeah.
mean, I just
Yeah.
wasn't. I wasn't great at taking direction from others, especially when I knew I was smarter than them and better looking than them. No, I'm joking. But,
Yeah.
I found myself in a position where, because I had very little financial education in the sense of being able to understand the movement of money, I was in debt. I was in my late 20s, early 30s. I was working as a firefighter and a paramedic just north of Boston, Mass. Loved that job, loved it. You don't do it for financial freedom. You do it for other reasons, probably because you're a little bit crazy. But I was working three jobs: fire department, construction on my days off, and then retail security work in the evenings. And not because I loved working 120 hours a week. I just needed to create enough income to at least try to make my monthly bills. So my personal financial journey has been a shit show, to be frank with you. I don't know if we're allowed to say shit, but I said it. If you got to beep it out, beep it out. It's pretty mild for me. And I paid a price for that. And the price was, marriages and, lack of connection to people that cared for me and who I cared for. It was a pretty dark time. Anyway, I'm standing on the precipice of pre-foreclosure in my primary residence. I had some unsecured credit card debt that needed to be addressed. And I was listening to the radio. I was in my pickup truck. I might have been on a job site or something. and a commercial came on the radio, and this was 2006, late six, maybe early seven. We hadn't quite got our teeth kicked in yet. And it was Teach Me Foreclosure, a free 1.5 hour seminar coming to your neck of the woods.
Mm.
And with my experience in construction, and I say experience, I mean, I was a horrible contractor. I did better dealing with people than I did dealing with 2x4s. But I had met some of these investors a couple of times on some of the jobs I was working on, and they were driving nicer cars. They had nicer clothes. They were smiling. They seemed somewhat happy, and I hated them. They seemed to be living a different life. And I remember having a conversation with this one woman, and this I will say with directness, she wasn't that smart, in the sense of she was just kind of like winging it, and yet she was incredibly, or appeared to be incredibly successful. So when the stars aligned, and it was a case of learning real estate fundamentals from the ground up, starting with single family homes, when I had an opportunity to learn that, I jumped at it. My wife, Mary Beth, we just picked up 17 years of wedded bliss. She and I went to that seminar together, and at the end of it, there was an investment in your education, right? Invest in yourself. You invest for a lifetime kind of concept. And I said to her, I said, what do you think? It was like 30 grand for 5 classes or something. It's a lot of money to me. And she said, well, what do you think? I said, well, I can't keep doing what I've been doing. I know what the results of that are, and they're not joyous. They're not serene. It's hard. I don't want to live a hard life. I want to live a good life. And she was really my first private lender, is what I called her, because we put the classes on her credit cards. And I remember I was doing a training over the internet from St. Thomas in the Virgin Islands, and just as I was telling that piece of the story on the Zoom camera, my wife, she didn't know I was working. She walked behind me with a big floppy hat, a glass of red wine, wearing a bikini, heading to the beach. And I thought to myself, she got an ROI on her investment. You know what I mean? Right there. Yeah. So that's where it started, brother. I started with single family homes, and I put some rocket fuel behind it, and it took us to where we are today. So that's kind of like the introduction to Dave.
Yeah, no, that's good. And I think you're being modest, Dave, as well. So tell us a little bit about your, career in the media, as well as, flipping Boston and that background.
Yeah, look, it's interesting. There's a lot of negative connotation around real estate education. And I'll be frank with you, there are absolutely some straight up, snake oil salesmen in that industry, right? There really are. You can go on the internet today and you can get educated on anything for free. However, education means absolutely zero if it's not implemented with a result. And for me, I needed implementation. So when I went to those seminars and I got educated and learned fundamentals from people who were doing it, because I actually did what I was trained to do, rather than just, I'm educated, I feel great about myself. Well, nothing freaking changes, right? I implemented what I was learning. I got recognized by these guys. So I then became an educator myself very, very quickly. They asked me, they said, your story resonates with people who are trying to make a change in their lives. People working 60, 70, 80 hours a week and just squeaking by. Why is that? Why is that acceptable? And I got a good rapport with an audience, a good rapport with a crowd. And because I was in that arena, in the education arena, there were guys that were hanging around in those circles back then. Gary Vaynerchuk, people know him as Gary V today. Like he was starting out. He was in that momentum, that area. Another guy was ClickBank, what the hell, or Russell Brunson. Russell Brunson was an entrepreneur, a lot of online entrepreneurs, e-commerce entrepreneurs, real estate entrepreneurs. So it's interesting when you surround yourself with that kind of mentality, you kind of get it by osmosis, right? And I was a cool kid because I could close and resonate with an audience, right? So they opened the doors and let me in, and that crowd introduced me to an online application for a TV show in 2010. And it was just when real estate was contemplating. It wasn't even there yet. It was contemplating doing flipping shows again because everybody was in real estate depression back then. And I turned in an application online just for S's and giggles. And I loaded the application with profanity. And the reason that I did it was, well, look, here's the thing. I figure there's going to be 30,000 applications for this thing, right? Everybody wants their 10 minutes of fame, if you will. I did it for S's and giggles. Like the idea of actually doing a national TV show was just a joke to me. Like I watched these shows and I was negative. I picked them apart just like everybody else does, right? But I knew everybody would want a crack at the title. So how could I separate myself from the crowd with an online vanilla application? What do? You talk about how cool you are? I've got a private jet and a Rolls Royce. Come film me? No, who gives a shit, right? What I did was I loaded it with profanity. Name of your company, go F yourself, LLC. It was just stupidity. And basically the catchphrase when I turned in the application to the production company, the last line was, don't call me, get on a plane, train, or automobile, come to Boston. I'll show you how we really do it up here. Like I fight fires. When everybody else goes running out, we go running in. I do real estate the same way. Don't call me, F off, love Dave, something like that. Well, they called within like 10 minutes after sending it. It was a 212. It was a New York phone number. And I picked up the phone, Dave, and I said, I thought I told you not to call me, you butthole. And I hung up the phone. And I'm like, please call back.
Wow.
So look, that's how it started. I took a chance, I guess, right? You take a chance, you put yourself out there, create a story around it. They came out, they filmed me and my ex-partner, Pete, messing around on a project somewhere that we were doing at the time. And it's funny, A&E Network, their commentary back to the development company or the production company was, that big English guy looks like he could get pretty angry. We'd like to see more of that. So there's your inside scoop, okay?
Wow.
Reality TV is not based in reality. You got to bend reality to make a TV show. And I'm a bit of a showman. So, we stepped into it. We did great. We did 4 seasons, 29 episodes. The only reason that it stopped being produced was there was some issues with intellectual property on the show that they needed to clear up, and they cleared that up. And by that time, once you fall out of that focus, I always say I'm hanging out in church basements smoking cigarettes with Dog the Bounty Hunter. That's where I have to, and Billy the Bug Guy. Yes. So, but here's what was really good about it. Well, it depends on how you look at it, good and bad, maybe. It's all in perception, right? As soon as you're on a TV show, you're perceived to be an expert. And because of the perception of being an expert, that opened doors for me that maybe some folks would have a harder time opening doors. So, I'm very grateful for the time that I spent on that show. If you asked me to do it again tomorrow, I would tell you emphatically, no. It's just not part of my focus today. It was good. So yeah, it spawned from there. And during that period of time, I learned a lot. I learned a lot about the speed of real estate execution, good contracts, making sure that there weren't skinny deals, because we refused to lie with our numbers for the TV show. Like, we weren't going to make anything up. If it was a tight, skinny deal, we put it out there and said, this was a tight, skinny deal. Stuff happens, The ones where we make 6-figure incomes on it, we have pride in putting that number out there to show that, it does work with the right team around you. And from there, I was taking that capital and getting rid of some of the financial challenges I had personally and rolled that into multifamily, smaller assets, worked my way up over the past, I would say, 10 years or so. I had a nice portfolio up in Maine that I put together with another guy. I put up the money and the tax returns. He put up the sweat and tears and dealt with the tenant base. That was a great thing. We exited out of that portfolio. We sold our last one last year, but it was like a ridiculous return. It was like a 700% return on the investment that we put in there, capital out of pocket. So, it's been able to tick some pretty substantial boxes for me along the way. Lending, I've been a hard money lender, I've been a private lender, The hard money lending business went out of business pretty quick with COVID. So,
Yeah.
I've learned some lessons. I've learned from failures as much as I have from success,
Yeah, so that's a great point, Dave. Why don't we talk a little bit about, what you're doing at Freedom Ventures now, and,
Yeah,
given that, lengthy, experience, right? I mean,
sure.
you've really had, quite a journey
Mm,
with multiple facets to it, right?
mm,
But I
mm.
know that you have a very strong ethos around, creating wealth for people and truly helping educate people, right? And, getting out of, risky things like the stock
Yeah,
market,
yeah.
educating them on investing in real assets and how it can really help build wealth. So can you share a little bit of that ethos with us?
Yeah, look, it was Obama put what was the act, the Jobs Act. When Obama passed the Jobs Act, he really opened up a Pandora's box in both the negative and the positive for wealth creation. As I'm sure I know but maybe your listeners know or don't know, up until that time, the what we call country club deals, right? They're the deals that go down on the ninth hole of the country club. The country club deals were really pigeonholed for an elite group. We'll just call them one percenters or quasi-institutional investors. And those deals were really passed around a very small community of investors. And when I talk about my background and financial illiteracy, it kind of is it's a driving force and a passion for me today to be able to assist people similar to myself in wealth creation, in looking at something other than what everybody else is doing, right? Why is it that multifamily syndicated real estate transactions, why are they not part of a financial advisor's offerings, if you will? Why aren't they a part of that? They offer, 2 times return on your capital over 3 to 5 years on a good deal. Some of them in development where we work today, we look at 3 to 4 times equity multiples on capital invested. Why isn't that part of it? Because it's always been that way. Financial advisors, your Merrill Lynch's, the rest of them. You can watch any commercial out there. Fisher Investments, we do better when you do better. It's all the same freaking thing, man. It's all marketing and spin. So, the stock market, the 401k program, even government pensions. When I got educated on what other people were doing with my money, I got a little annoyed. There are hidden fees that are transacted with other people's capital without other people's permission. Hidden fees, meaning they don't know they're there. And with real estate and my own personal journey, I got to a point where I really had to look at it and take some ownership. And for me personally, I kind of had a moment of clarity, if you will, where I said, you know what, I'm going to live or die by my own decisions. I'm going to educate myself. I'm going to be as dialed in as I possibly can. I have my own risk aversion. And then instead of standing there in fear, which stands for false evidence appearing real, instead of standing in that world, I'm going to do what Warren Buffett said: when everybody's fearful, be greedy, and vice versa, right? I'm going to implement and execute. And for me, our investors that come on a journey with us primarily are accredited investors. And we spend a lot of time educating them first. Just because somebody says, I love you, Dave, I saw you on a TV show, I kind of get what you're doing, here's a check for 500. I may very well say, no, wait a minute. We need to bring you up the gradient first so that you understand risk and reward, not just reward. So often these investments are sold on rewards only, right? Without looking at the risk profile that is attached to it. So if an investor doesn't understand what an internal rate of return really is, if an investor doesn't understand what a cap rate is in a specific market, if they don't understand liquid over illiquid investments, so many people have held on to liquidity as their moniker for investing. Well, liquidity defeats compounding returns. That's why the stock market doesn't outperform commercial real estate, right? Commercial real estate has outperformed the stock market 12 out of the last 15 years because human beings tend to have this this urgency to, oh my God, it's going down, pull the money out. Oh my God, it's going up, let's sell it, pull the money out. So as soon as money moves, it has a reaction, it has a consequence. And most people don't realize that the brokerage is the one that makes the money on a transaction, because they do it on bulk volume, right? If you're making, 2 points on $1 billion transaction in and 2 points on $1 billion transaction out, and it happens in a nanosecond trading money, then somebody's getting rich, and it isn't the middle America, right? So without me getting political and standing on my soapbox, and you're bad, man, you teed me up so good, it's like scratch the surface and off it goes. But I've seen the results of 401k programs after 50 years of employment that won't take somebody to the finish line comfortably. Now, who's responsible for that? Two people: the investor, the individual, the employer, and then also the system. The 401k system is, in my opinion, not what it is portrayed to be. So if I can educate the individual, if I can show them, look, in a development project, for example, let me show you the reasons why we feel it's a good deal, and then let's discuss it. That's kind of like the opening dialogue with an investor. We do it through webinar formats. We do it through, slide decks and information, et cetera, et cetera. But if I've got $300,000, I can do two things with it. I can leave it in the volatility of the stock market. I could maybe buy some commodities. Gold is up, gold is down, oil is up, oil is down. We can ride those roller coasters as well. The bond market is inversed right now, which is kind of interesting, right? That's not a good sign when the bond market is inversed.
Yeah.
I'm learning that from my business partners. So, where can I get yield? First of all, what is a good yield? Are you excited with a 5% return? Are you excited with a 7% return? What if we could offer a 6 to 8% preferred rate of return, inclusive of cash flow, as the building is built and then leased up and stabilized, is what we call it. Then we sit in cash flow for maybe 3 years, 2 years. If the market's great, we'll sell it. If the market's cool, we'll cash flow it. We'll sit in it. It always has the ability to create some kind of income. And then when the timing is right, we liquidate and we sell that asset, and it targets out for that investor. Let's say that investor put up 300. At the end of the whole investment, that investor on a 3x or a 3 equity multiple would have the expectation of their 300 in principal coming back with 600,000. So that would be a 3x or a two times the principal invested. Well, people look at that and they go, that's not possible. That's illegal. No, it's not. Welcome to the world of commercial real estate investing, right? So being able to educate them to see the potential is critical. Once that light bulb goes off, it's interesting how their focus narrows, right? And I can't tell you how many times I've said, it's not all or nothing. It's this and that, right? It's don't liquidate everything because my story sounds more enticing or, greed driven. Some people are just greed driven, right? Be smart with your investments. So for me, there is nothing. I'll give you a classic example, and then I'll give back the mic, as they say. I sat down with one of our investors, gentleman, been in the printing business, embroidery, and he's got government contracts for like police departments and sheriff's departments, and like he's in the apparel business, but embroidery and printing and stuff. And I sat down with him at his office, and I was going through a presentation with him. And he's been receiving, I want to say, somewhere around a 7.5%, 8% return on an investment that he's had with us for about a year or so. And we were looking at the next investment, and it was a little more, angles attached to this investment. It was a development deal. It wasn't an existing structure. So we needed to walk through the timeline a little bit more so that he understood. And basically he said to me, he said, Dave, I understand the deal to a certain point. And then he went 0 degrees with me, David. He looked at me and he said, I'm investing in you. He said, I'm investing in you, your team, The information that you give me is great, but at the end of the day, I'm betting on the jockey, not the horse, right? And that was kind of like an eye opener for me. So at the end of the day, the investor has a trust in us as the operator, as the general partner, to be invested in the deal as an LP limited partner, right? Taking out the position of the equity, and then trust that I can then go and get the bank to also like the deal, to bring in the rest of the capital on a construction deal. So we always say to the investors, here's the way to look at it. We're going to do 100% of the work. We're going to give you, the investors, 70% of the profits, and we'll take 30% of the profits. But I just want to make sure you understand, Mr. Investor, Mrs. Investor, we're going to do 100% of the work. If you're okay with that and you understand it, then come on aboard and let's go through the SEC compliance and documentation, et cetera, et cetera. So it's exciting to know that you have, as a GP, the opportunity to impact not only their retirement, but think about it. If they stay in and they work compounding returns, it's something pretty cool for their kids and maybe their grandkids and maybe even a generation after that. So, you know, it's an exciting business to employ people to build large structures. It's an exciting business to assist investors along the way. But it's a team-driven business. It cannot be an individual, one ego trying to run the whole show. It has to be a group effort to be successful. So, and I love it. I freaking love it, dude.
Yeah. What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com. No, 100%, Dave. I mean, so many good points in there. And maybe let's just go back and unpack a couple of those. I just really love, again, your ethos of trying to educate and help people really to be able to make the right decisions, as you said, because everyone has, you know, their own risk tolerance. You know, they have their own perspectives, right, in terms of how they're investing. And, you know, I totally agree with you that, you know, 401ks and government sponsored qualified plans, you know, we're in a significant problem in this country, right? And people have been just relying on those too much. And, you know, we're sitting at a time now, the market's down 25 to 30% this year. But there's also this element of control, right? When you put your money into the 401k, right, you have absolutely no control. The government's telling you when you can take it out, how much you can take it out. And by the way, I mean, they're probably going to be increasing taxes by the time you take it out. So we've actually created a calculator for investors where we've modeled out if you take your 401k and you pay your 10% penalty and your taxes now, and what that will do for you versus, you know, investing it into something like risk-adjusted return in multifamily, and see where your break even is. And it's quite interesting that you can break even depending on, you know, your assumptions. You can break even in just a few years. You can gain back that control. You can increase your tax efficiency and really accelerate, you know, your gains. You start looking 10, 15, 20 years, you know, down the pike. And that's, you know, pretty tremendous. And then also, I just want to talk about your, you know, your point of really risk-adjusted returns as well, right? So people who are uneducated talk about these types of investments as sounds too risky, right? Don't know enough about it, right? Meanwhile, they'll invest in their financial planner and still not know all the complexities. And frankly, who could understand all of the complexities of the market? Because a lot of it doesn't really make sense because it's rigged, right?
That's a broad statement, young man.
But you're betting, you know, you're betting everything. You know, you're betting everything on the market and things that don't necessarily correlate. Something happens in China overnight that impacts your portfolio today. And I've compared that to a real estate project like you're talking about, which, you know, you have direct control to say, hey, you know, we identified a property at a great return, right? We got a great buy right out of the gate. Right? So you know that you can make improvements. You can put in, a valet trash service and start to increase
Yeah,
rents, right? Or you
yeah,
can put
yeah.
in a parking lot, right? That wasn't even there before. There's so much creativity to it. But as you said, there's just this risk adjusted return to it, which is really nice because you can factor in, those returns over the long haul and know that
Hmm.
you're investing in a tangible asset
Hmm.
with, good macro economics that are really in play, right?
Real estate never goes to zero. Okay, never.
Yeah,
Doesn't go to
yeah,
zero. Even if it gets wiped off the face of the earth, the insurance is in place because we got replacement costs, so it never goes to zero. Businesses will go belly up, right? Enron, if you were an Enron client back in the day. So it's, you know what though, David, it's hard. If it feels for me like I'm pushing a donkey up a hill is the imagery I use when we're talking risk adjusted returns. We're talking about tax advantages. We're talking about depreciation, cost segregation. Can show that some investors get a K1, that the tax advantage is superior to the K1 return. So it's a tax-free investment for some people, depending on their tax bracket structures, etc. These are all commonality for the wealthy. The conversations that we are having at our level in our networks and our groups, it's common knowledge that tax advantages are superior in real estate than any other investment out there, right? We kind of take that stuff for granted. So when it comes to having that conversation with an investor who's contemplating moving into this newer arena, I personally feel it needs to be done delicately, and it takes a little bit of time. It's not smashing them over the head and, hitting them with timelines that don't make sense, right? We work anywhere between 14 to 21 days for them to understand the investment that's in front of them, and then have really great communication with the team. And one of the things I'm proud of is that we are not too big that we lose touch with our investor pool, but we're not too small that we can't offer, targeted 3x, 4x returns on our investments because we got the capital partners to execute on it. So being in that middle market is what we call it. We're a middle market firm, and we build and offer the missed middle housing. We focus primarily on workforce housing in the Florida marketplace because it's so undersupplied. So, it's understanding. If it doesn't make sense, people don't do anything, right? They'll just stand still. And a guy said to me on a deal we're doing in Fort Myers, Florida, we're doing a 16,000 square foot mixed use office retail space on McGregor Boulevard. And an investor and I were discussing the deal, and he was contemplating putting, I think, 100 grand in. And I showed him the usage of capital, and he got to understand the flow and cash flows and coming out at 2-year mark. And this guy was super, super, super conservative, like he was scared. And he said to me, first of all, how are you making money? Because there was a very small acquisition fee attached to it. I said, we're taking a very small payday on this because we're renting half of the second floor. So I'm not gonna juice my investors on the front and get an office space out of it at the same time, right? And then he turned around, he said to me, so what is worst case scenario? Tell me the truth, Dave. I said, look, if I'm SEC compliant, here's the truth. You can lose every penny you put into an investment like this. You can lose every dime. I said, but common sense would tell you worst case scenario is break even. And I just used that as an example for him. Worst case scenario is break even. We build the building, we don't increase the valuation, we don't put tenants in it, and we just sell it to the next investor and you get your money back. Now, this guy was incredibly smart, Dave. I mean, high E-suite level guy. I'm not going to mention the company because it wouldn't take too long to figure out who he is. And he says to me, well, if all I'm going to do is break even, I might as well leave my money in the bank. And it was like, oh, I couldn't leave it alone. I said, do me a favor, just Google the inflationary rate right now, will you? Jump on your phone and Google what inflation is. And he Googled it, and it was, I don't know, 8.5%,
Eight,
whatever it
yeah,
was, the last number
8.6.
that they've thrown around. I said, so your capital is working against an inflationary rate of 8.5%. I said, but the good news is your money in the bank, what's that? It's got to be earning at least 10, 12, 15%, right? And he went, it was like I'd shoved the dagger in him, because he'd been in his box, right? He'd seen the
Yeah.
world through his eyes. That lit the fuse, if you will, for him to really be aggressive about asking questions and seeking more information. And then he
Yeah,
invested with
no.
us on another deal. So, it's knowledge. It's knowledge is the answer.
Yeah, it's such a great point. And in part of our wealth strategy, the first phase of it, it's really all about mindset, right? Because
Oh,
if
for
you
sure.
think if you think you're the smartest person in the room and you know everything, I
Wrong
mean,
room.
this isn't for you. Yeah, right.
No, it's not.
You need to really be able to challenge
Yeah.
limiting beliefs,
Yeah.
existing biases, because that's $30 trillion financial services industry has an
Mm.
agenda, and they want you to
Mm-hmm.
think that the
Mm-hmm.
401k is the only option,
Mm-hmm.
right?
Mm-hmm. Mm-hmm.
So it's not until you start asking questions and drilling into the details, and as you say, getting educated on these assets to really determine, hey, I think this might make sense, right?
Yeah. Yeah.
But you have to start there, otherwise, you're never going to make it out of the gates.
You just said something that I personally have tried to do my very best to live by, which is to never be the smartest person in the room. That doesn't challenge anybody if you are. And if you're in that room just to be in that room, then that's ego. EGO standing for E's got out. There's no grace in that, So I like to be around people who are a lot more oriented to specifics than I am. And what I mean by that is I like to be around a crypto genius. Does it mean I'm gonna invest in crypto? I still don't understand it, and I've been around some really smart guys who are in blockchain investing. But guess what? If you want to come in my room, I've got development and multifamily real estate pretty much dialed in. You know what I mean?
Yeah.
Can I get better? Of course I can, every single day. So I'm always looking to surround myself with smarter guys in the industry. But as from an investor standpoint, it really is, does the story make sense? Can I invest in the jockey? Because not every deal is going to go exactly the way it was pro forma, and assumptions are just that, assumptions based on experience and projections. But case in point, I was in Miami last week. Last week we were in Miami, and we met with a large family office that just made a pretty nice investment into our Cape Vista project. And I got to talk with these guys, and I immediately went to, what are you doing? Because they got $2 billion under management, right? I want to know their game. What game are they playing? It's just zeros. It's zeros at the end of the day, but there's a lot more zeros on their balance sheet than there is on ours. And it was so cool to learn, but they're building self-storage facilities in Europe, because there is no self-storage chain as such in Europe. Like over here, we know all our self-storage chains, right?
Mm-hmm.
You can rent the moving truck from the same person and go straight to the storage facility. But they double their yield because they're doing it in Europe in comparison to the same project here in the US. So that stuff excites me, man. Like being around those kind of people.
Yeah.
How did you start? How do you manage it? How do you find your builders? You're in Europe. They don't work the same way we work. It's just so interesting to listen to somebody else's expertise and experience. And it's the same thing in our world, right? The same thing in financial investing. I think there is definitely, and I always want to be conscious of this, because I'm you, you're me. Like I understand that world in the financial advisory world. But I think the day will come, maybe not in my lifetime, but definitely in the next generation. I think the day will come where there will be some symbiotic relationships between us in the alternative investment world and those guys in the financial advisory world. There has to be, because I think at the end of the day, that world is gonna run its course to some extent or another. You know what I mean?
Yeah.
Like it
Yeah.
won't
Well, it
it won't
already
be the
is. I
only
mean,
focus. Does that make sense?
yeah, it does, because the 60/40 model that they've had
It
for
doesn't
so
even
many long,
right.
right? I mean,
They
it's
don't even
completely
use it
upside.
anymore. Yeah,
Right. It's completely upside down. And all of
yeah,
the assumptions that have been made, right? The
yeah.
Monte Carlo simulation and take out 4% a year, right? It doesn't necessarily make
Right,
sense. So,
right,
and
right.
and I think we're seeing that now, Dave. I mean, I've had some portfolio managers. We have financial planners who've invested in, our deals, and
Yeah.
some portfolio managers that are looking to actually add whole new verticals of
Mm-hmm.
alternative assets,
Mm-hmm. Mm-hmm. Mm-hmm.
because they're,
They're
they're seeing
progressive.
it too. Yeah.
Yeah, they're
Yeah.
progressive.
Yeah.
If more of them did that, the investor would do better. I'm just going
Right.
to make that statement.
Agree. Yeah.
If there was more verticals into AI
Yeah.
and the sticks and bricks, the solidity of investing in real estate transactions, I know the investor would do better because they're not relying on it's diversification again, right? It's
Yeah.
diversification inside diversification inside
Right.
diversification, you know?
Right. Right.
So I'm excited to hear you say that. That's good news.
Yeah. So Dave, if you could just give one piece of advice to listeners about how they could accelerate their own wealth strategy, their investing, what would it be?
Yeah, that's a great question. It's got so many prongs attached to it. I always say educate, don't speculate, and then implement. And I know that seems super simplistic, but consider the source of the information that you're getting. You can go on TikTok and Instagram and Snappity Chappity and everywhere else that you want to go these days, and get a ton of information, but consider the source. Ask great questions. Ask uncomfortable questions. If you ask the uncomfortable questions, then you'll see the response of the person that you're asking. You'll challenge their thesis, challenge their integrity, challenge them. I love to be challenged. So if an investor is challenging their financial advisors, their operators like us in commercial real estate, if they challenge those people, they will very quickly find out where they can risk adjust their investments and create more wealth because they'll feel good about it. It'll feel right. And if it feels right, and even if it doesn't perform as well as it's targeted to perform, what if I only doubled your money in 3 years instead of tripled your money in 3 years? Will you be unhappy? No, is what they say. I say, then good, then this investment is for you. This investment is for you. So, ask those questions, do the research. You don't have to know everything to do anything, but you have to know enough to ask the right questions and then implement. So that's kind of like my philosophy around it.
Yeah, love it. Couldn't agree more, Dave. If investors or the audience would like to reach out, learn more about,
Yeah.
what you're doing at Freedom Venture, what's the best place?
Yeah, freedomventure.com. Go straight to the website. Ton of information on there. You'll see the offerings that we have. We just put together a fund structure, the Suncoast Growth Fund, replace some of the inventory that was taken away by Hurricane Ian right in the middle of our marketplace. We had to endure that. You can actually reach out to the office, 781-922-4418, 781-922-4418. If you do reach out and you want to touch gloves with me, ask some questions, get to know us a little more, I'm more than happy to take a call. Just let my office know that you heard me on Dave's show here, or Google me, Dave Seymour, Seymour. I'm no longer on America's Most Wanted, so we pushed that stuff down. We're good, so you can find me. You
Yeah.
can find me. Ask questions, man. Ask the questions. But we're here. We're busy.
Yeah. Yeah. Awesome, Dave. Yeah, we'll put all of those contact details into our show notes today. Can't thank you enough for coming on the show and connecting with our audience. It's always a pleasure to connect and learn more about what you guys are doing, Dave.
Appreciate it, man. Thanks for the time.
You bet.